Hello and welcome to CFA Society India's daily webinar series. My name is Vidhu Shekhar. I am the India country head for CFA Institute. And we have a very special guest today. Her name is Dr. Punita Kumar Sinha. I will introduce her in a little bit. But first, a few words about what we are doing as part of this series and some housekeeping notes. So as you are all aware, India is going through a 3-week lockdown, and the society decided that the best way to keep all the members engaged would be to put out one webinar every single day during the lockdown. So we are coming to the end of that period, but we've got addicted to this now. So we're thinking that we will continue, maybe not at a webinar a day pace, but still quite a few webinars are still going to come your way. So yesterday you enjoyed listening to Dr. Subbarao, and today we have Punita with us. Our webinars are on a series of topics. Some of them are related to markets. Some are technical topics, like you had one on manager selection. Some are fun topics, like you had one on dressing etiquette, and I think there's one on fitness coming up. So we've mixed things up so that you enjoy at the same time that you are able to keep in touch with everybody else. So before I introduce Punita, the housekeeping notes, the webinar is going to last for an hour. Punita is going to speak for about 20 minutes, and then we will have a Q&A conversation. You can see a Q&A icon on your screen, and if you click that, then you can type in your question, and I'll be, as a moderator, I will ask, I'll collect some of your questions and then ask those questions, and we have a conversation. It's important for you to fill up the feedback form. So CFA Society members, it's mandatory to fill up the feedback form if you want to get your professional learning credits. So that allows us to understand what you think, what you want, and then we can build our future offerings accordingly. So having said that, let me see if I'm missing anything. Okay. So let me move on to introducing our speaker for today. Dr. Punita Kumar Sinha is an industry veteran. She has a PhD and MBA from Wharton Business School, and she's a CFA charter holder. She's on the board of governors of CFA Institute and serves on the board of many Indian companies, including Infosys, and JSW Steel, and Blackstone, Embassy REIT, Shrey Infrastructure, and so on and so forth. So she's got lots of board experience, and she's got lots of experience as an institutional investor. So right now she runs her own investment firm called Pacific Paradigm Advisors. And earlier she used to be senior managing director of Blackstone and head and chief investment officer of Blackstone Asia Advisors. She was also senior portfolio manager and CIO for the India Fund, one of the largest India funds in the US, for almost 15 years. And during this time, she managed several Asia funds as well. Prior to that, she was managing director, senior portfolio manager at Oppenheimer and CIBC World Markets, and so on and so forth. I will not go through her whole CV, but suffice it to say that she's a well-known industry figure and quoted quite often in the media. And it's great to have you, Punita, today on our webinar. And we look forward to listening to you and to a great conversation. Over to you, Punita.
Thank you, Vidhu. Thank you, CFA Society India. Thank you, CFA Institute. And thank you to all the members who have taken the time to join on a busy day. I'm sure we are living in unprecedented and extraordinary times, and you're all getting a huge amount of information overload. So sitting at home, working from home. So thank you very much for joining in and listening in. So today what I thought we would cover is how boards and companies are responding to the crises. I'm sure you've heard from the investment professionals on how markets are reacting. So I won't talk about markets today, but I'll talk more from my vantage point as a board member and also what we see companies doing in these times. So many of you are obviously employees, and so you'll have your own experiences, which I'm sure we can have some Q&A at the end of it. But let me start with how boards and companies are responding to the crises. So the first and foremost, I think on top of mind for every company right now and for every board member is to make sure that the company is got enough cash to tide over these difficult times. These lockdowns have created a situation for many companies where they have to be in complete shutdown. Their revenues during this period are going to zero, and they have all the operating expenses related to employees, office space, and all the other admin expenses that they need to keep going. So when the lockdown is over, they can start functioning. So it's very important that these companies have enough liquidity, enough cash to tide them over through this time. And what we are finding is that many companies, who, especially the ones that have taken debt, are finding it difficult now because there's no revenue source to repay their interest. And various governments in different countries and various central banks are responding to support the businesses in giving moratoriums on their interest payments for a few months, or extending loans to small businesses so that they can tide over this period. So liquidity has become a very important topic of discussion among senior management and amongst board members. Several companies are pretty much down to the wire, and so they're looking to their existing investors for rights issues and seeing if they can inject more capital. Some companies are refinancing their debt at lower rates, given interest rates have come down, and trying to see if they can do a refinance. Some are tapping into their credit lines, particularly the private equity firms have instructed a lot of their portfolio companies to take on and tap into the credit lines. Even if they have cash today, they should tap into their credit lines and have more cash available and more liquidity available than they need, because we don't know this, the virus could take about a year or so, and there could be, a lot of transitional times and shorter lockdowns. And so it is a little unprecedented. So they've advised their companies to take on credit lines. So liquidity has been very important. Capital allocation decisions are also becoming important. Companies are deciding how much dividends they should give, whether they should give dividends or not, whether they should cut dividends. Many banks globally are saying they will not cut dividends. However, some companies are saying they're reevaluating their capital allocation policies. So all of this has become quite an important discussion. And those companies that don't have liquid cash or don't have reserves are the ones that are going to face the most difficult times. So I think this is a learning for all companies. And in fact, there is amongst various board groups a discussion that has started, is that should companies have an emergency reserve fund? Most companies don't have that today, but should they keep that so that in the future, if there's another issue or crises, that companies, this is a learning they should take away. In fact, many companies are also trying to sell down their investment portfolios or reduce their investment portfolios and raise liquid cash. So part of the correction in the markets is not just coming from institutional investors selling down and raising cash. It's also companies and endowments who have to, fund the operating expenses are also selling down some of their investment portfolio of liquid assets, equities, bonds, etc., whatever they can, and moving into more liquid or money market funds or cash. The second thing that we are discussing is that many companies have been reviewing M&A deals. And while, of course, right now is not the time to be going aggressively ahead with an M&A deal, and it's not even on the priority list of most boards, but to be ready for when business activity resumes, that you can look at the potential targets you're looking at or find more potential targets, because the valuations that you'll probably get them for is much lower than what you would have earlier. Also, there are probably many more targets going to be available because businesses, a lot of businesses have hurt, new businesses will be created. So there is opportunity to pick and choose, divest certain assets, acquire other assets. So this whole discussion on capital allocation, M&A, is a live and important discussion that boardrooms and company managements and senior managements are having. The CFOs are extremely busy looking at their cash reserves and making sure that they're able to pay the bills. We are seeing some companies who are highly levered refusing to pay to their suppliers. We are seeing companies in India having stopped payments. For instance, the cinema halls, etc., have stopped payments to the malls. The retailers are stopping payments to the malls. So there is many companies that are just saying, we don't have the money, we don't have the revenues, we're just not going to make payments. That creates a cycle for other companies who are their suppliers, or because they then have a payments crisis. So this is something that is, having a ripple effect across the whole economy. So we move to the next slide. Shraddha. So the next is business models. Now, one of the things we've obviously seen in this lockdown, and that there are essential businesses and there are non-essential businesses as described by governments in different countries. Every country has its own list of what is essential and what is non-essential. But one thing that is pretty common across countries in this lockdown is that grocery stores, supermarkets, healthcare professionals, hospitals, pharmacies, these are considered essential businesses. In many countries, certain manufacturing is considered an essential business. In other countries, those are not necessarily considered essential business. So for instance, pharmaceuticals is generally considered, production of pharmaceuticals in this environment is considered an essential business. In some countries, steel making is considered essential, like in India. In some countries it isn't. So every country is deciding what their list of priorities are from their economic standpoint as to what they call essential and non-essential. Technology, of course, is considered an essential service. In India, I think IT services are considered an essential service. Financial services and banking is considered an essential service. So those are still operating, although with skeleton crews and a lot of work from home and a lot of other ways of being able to provide the service to their customers. So every company is rethinking their business model as well. The companies that are in essential services who are operating now have another challenge as to how to get their workforce to either come to work because of the lockdowns and the transportation issues, or how to enable them to be able to work from home in a way that doesn't compromise client confidentiality or expose the company to cyber attacks, et cetera, et cetera. So companies, HR departments are, as I said, the CFOs are really busy, the HR departments are really busy trying to ensure that, and the IT departments of companies are trying to ensure that the companies and the employees are able to function if they're an essential business. And then the other thing that we are finding in that in certain manufacturing essential businesses, the additional issue is what do you do with migrant labor? And that's particularly an issue in India because the labor force, a lot of migrant labor has moved away. They don't want to, even if they have the job, they don't want to be providing that job because they're anxious and they want to go back and be with their families. And so many companies are finding it difficult to even produce, even though they're allowed to produce, as to how to handle their the workforce. And then to the extent that they have workforce that is coming, how to ensure that there is the health and safety of this workforce is being maintained and they're getting the right transportation, the right gear, the right equipment to protect themselves and everyone around them. So, while it seems like we are in a lockdown, actually, to the contrary, a lot of people are busier than ever because they have taken on additional responsibilities. There's additional challenges and issues that they have to deal with that they hadn't dealt with. So a number of people are saying that they're actually working much harder now than they did before. And so I think this lockdown is really not a lockdown of work. It is just a lockdown in some cases of the physical world, but not the virtual business world. So we will, as we look at business models, one of the things that we are examining and a lot of companies are doing is pivoting, which is, okay, if I'm not an essential business and I'm in a non-essential business, my revenue stream is completely drying up. What do I do so that I can at least be useful? I can keep my workforce employed and I can do something for society. So a lot of companies have started pivoting their business model. Particularly we've seen in the auto sector, the auto companies, many of them, both in India and in the US. In the US, Ford and GE have said they're going to make ventilators. In India, Anand Mahindra has said that Mahindra Group is going to make ventilators. A lot of textile companies across the world are saying, okay, we're going to try and make PPE equipment kind of gear for the health workers and for the population at large, instead of doing their regular textile. A lot of companies have shifted into making a lot of masks. So we are seeing many examples of companies who are trying to pivot and being useful to society, useful to and also to ensure that their employees are gainfully employed. The alcohol companies, as you know, have started making sanitizers because there's a shortage of hand sanitizers. So the alcohol companies are making sanitizer. One example of a large, well-known company, Under Armour, is now making masks. Tesla is trying to provide the lithium-ion batteries for the ventilators. So companies are being busy and trying to be useful. Now, what happens to the workforce in this environment? So let's move on to the next chart. Shraddha, if you could, personnel. So as I said, the HR departments are really busy trying to figure out first and foremost how to maintain the safety and health of their employees and provide them the necessary tools to be able to function. But the bigger issue is, how do we handle costs, given that revenues are coming under severe pressure, and what to do about large amounts of workforce in terms of layoffs. So that is another debate that is happening at the senior management level, at the board level, is what do we do? Do we, how long are these lockdowns going to go on? How much impact it's going to have on revenues? And then do we continue with the workforce? Do we reduce their salaries? Do we lay off people? So those are issues. Some companies are saying we're going to cut everybody's salary by 50% and not lay off anyone. Some companies, obviously in a lot of companies, we are seeing the CEOs and senior management having taken pay cuts. A lot of companies, even in India, are donating 1 month of salary to the government. So, the issues of how to retain the workforce and how to handle the workforce disruptions is quite an important one. So especially in the financial sector, where we have companies in the microfinance and the last mile access business correspondents in the rural areas, they are finding it difficult to deploy their field force for collections to disperse new loans. So they are trying to move online, but the rural population isn't geared to doing, paying off loans online or, accepting loans online. So it is a certain segment of the business activity is being hurt. And then what do you do with those field force during this time? A lot of companies actually hiring, right? So some people are actually losing employees even though they don't want to lose them. So companies like Amazon in the US, even in India, I'm sure Home Depot, all the delivery services, grocery stores, pharmacies, globally in general are hiring people. They need more workforce and they're willing to pay them, at least in the US and like in the supermarkets, the salaries of the employees who are willing to work is actually gone up 30–40% during this time. So in some businesses, Walmart has announced that they're hiring 100,000 workers. So even if you want to retain some of your workforce, the workforce is getting anxious. In some companies, like in Macy's in the US, they furloughed their workers. That means they'll take them back, but they're not paying them salary. So the workers get anxious. So then if Amazon or Walmart hires them, they'll move. So even when business activity resumes, what are you going to do if a lot of your workforce either decides not to come back to work or have gone somewhere else? You've spent all this time training them. So that's an important, it's going to really disrupt workforces for companies. And that is an issue that is going to remain live for a while because, even if you are willing to pay and keep them, many of them are just not wanting to come back. And particularly in India, the migrant labor, a lot of manufacturing companies, the biggest concern is that once the lockdowns open up, a lot of the migrant labor that hasn't been able to go back to their homes is now going to go back and say, look, I'm not going to come back to work. I haven't seen my family. I want to go back home. And those that have already gone, how do you get them back? So these workforce disruptions are definitely going to hurt the business activity in some form or the other, and then the economy. And one final thing that very few companies are doing, but given the risk to lives due to the coronavirus, succession planning for KMPs becomes even more important. So the KMPs could also get the virus, right? And so especially for startups, where you're dependent on one key founder, the investors really need to think about succession planning, because your whole business is dependent on one or two key people. And it's very important that you make sure that there is a second group of management that can, whether if these people get hospitalized or sick or unable to come back to work, that the business can function. So while companies need capital, investors are simultaneously worried about these issues. Now, of course, I'll move to the next chart. The risks, also as we in boards, we've always had risk management committees. Every board has a risk management committee, but many of these risks were not anticipated. I don't think anyone anticipated a global pandemic. So how do we think about risks going forward as boards? That's an important discussion that is going to be happening over the next 1 year. How do we do scenario planning? I don't think most people have forecasted a bare scenario the way that we might see ensuing right now. So we might see boards doing a lot more scenario planning, and then also business continuity. Business continuity has always been, every annual report talks about every company's business continuity plan, but this kind of business continuity plan, I don't think was envisaged by any board or company. I mean, most people say that they can, work for a week or two from home, and now these business continuity resilience is being tested. And so companies are going to come out of this with new learnings and seeing what worked, what didn't work. And so we're going to see a revisit of the business continuity plans and how that's going to be reshaped. It's going to be another discussion that's going to be had in boardrooms and company managements. Another issue in the risk side that is going to be debated again is more and more people work from home, and it becomes more maybe a norm going forward as well. How do we, we might see risk of cyber attacks. How do we maintain confidentiality? Are the systems and IT systems resilient enough for people to work from homes? Is the bandwidth enough? So, in India, obviously, some of the articles that have come out are talking about not having sufficient bandwidth. So do the telecom companies issue more spectrum? So those are all kinds of new debates that are going to happen. And then how do we view privacy in this environment? There's been a lot of emphasis over the last 2 years on GDPRS and privacy. And now, if you're going to have a world where it's more virtual, how do you revisit privacy? These are all topics that are going to be relooked and rethought of. Can we, Shraddha, we move to the next slide? Now, as far as board meetings, even the regulators are sort of changing their view. And in India, earlier virtual board meetings were not allowed. You had to have physical presence to get a quorum. And while you could join on video conference, you needed a certain amount of people present physically as well. This is the first time that the Indian regulator, Ministry of Corporate Affairs, is now allowed totally virtual board meetings. So we are having a lot of virtual board meetings for this quarter, where everybody's only joining virtually, which was unheard of. And so, and also the meeting formats for most boards are becoming more, because they're virtual meetings, they're becoming shorter and focused mostly on the key issues. And there are a lot of conversations happening outside the boardroom. As I said, all of these issues that I've talked about, they're all happening outside the boardrooms. But one of the things that we have seen is that the focus on financials and earnings for this quarter in the boardrooms is going to be, maybe for the next 2 quarters, is going to be less. And the issues that are going to be debated are some of the other issues that I've talked about. So earnings, everybody knows earnings are going to be negatively impacted. Nobody can predict what earnings are going to be in the next few months. So, you know, one of the things that in India and boards, in March, we typically do our annual budgets, and that's presented to the board. But this time around, as we reviewed, you know, the annual budget plans, it was quick. Everybody quickly realized that there was no point building out a business plan for the next 2 years and trying to forecast budgets, because we are in a different world. It's very difficult to even forecast what happens. So let's, you know, focus on the near term and more on the assumptions and the readiness, rather than just the numbers, because the numbers by themselves are all going to change. Next slide, Shraddha. So given the uncertainty, it's very, very important that companies communicate a lot more with their stakeholders and investors. And the stakeholders are not just investors. Stakeholders are board members, your supply chain, your customers, your, you know, so the whole ecosystem that you operate, the communities that you work in, your workforce. So communication is very, very essential. And the more you communicate, the more your ecosystem is going to have confidence in you. So we really are recommending managements to communicate, and keep everybody informed as to what are we doing, how are we dealing with it, and what can we do to help. So I think that's another thing that I think we are seeing more of, and hopefully I think companies should do a lot more if they haven't already done. Next slide, Shraddha. So I think at this point, I will open it up to Q&A. Vidhu, is that a good transition time to open it up? Because I mean, I have a bunch of other examples, but instead of going through what other companies are doing, I thought maybe I can cover them in the Q&A.
Sure. Thank you so much, Punita. I'm getting an echo. Yeah, it's okay now. So, you know, we have a series of questions on the Q&A panel, but and many of them are, I wish I knew the answer to that, right? So it's a good set of questions we've got from very specific ones on what kind of you know, companies will be impacted, how much, and so on. But let me start with the last point that we discussed about boards. Do you think that the way boards look at their responsibility and the way they operate will change significantly as a result of what has happened now? Now, you know, I saw this news that Wimbledon has been ensuring their the championship for the last 17 years, and they pay a premium of £2 million every year. And they've been doing this for the last 17 years. They've paid out £34 million. And this year they're getting their money back. They're going to get £140 million back because of the insurance that they bought. At the same time, we know that IPL never bought any insurance for something like this, and hence they are facing a huge loss because of the cancellation. So I'm sure that company managements and boards are really going to look at their risks very differently. How are board conversations changing? Who is leading these conversations? What's happening in the executive management? What's happening in the board?
A good question. Boards. I would say at this time, the management is so busy that boards are really just ensuring that the management are able to function. We've raised important issues, but this is the time where we haven't really sat down and started discussing the future. It's more like let's focus on the present and let's make sure we get through it. The future, and as you said, do we buy more insurance? That's an important discussion point we will have. And what kind of insurance? And I'm sure insurance companies are already planning new products and hiking prices for in anticipation. But at the moment, everybody's dealing with the present, and we are not really talking about how do we live post this crisis, what the new world will look like, and what are the issues we should start thinking about.
So it's very hard to see 2 or 3 months in the future and see to even talk about long-term impacts. But it is very clear that business is not going to be the same. This is, I suppose, this question is going to be debated for quite some time. See, running a company is very hard even at the best times. That is, there's so many other things that you need to worry about, strategy and execution and risk and so on and so forth. Do you find that in general, CEOs and company managements have it's focused their minds on what it means to run their company, what are they doing for their stakeholders and so on? In your conversations, what sort of response do you see? Is it a good response or is it a panic response? What's happening?
Well, one of the skills that CEOs are supposed to have is to maintain calm and composure under stress, and so they're being tested. Their leadership style is being tested, and how they respond. So I haven't come across a CEO who's expressing panic. They're all expressing the need to continue to function. They're relying a lot on their leadership team. So everybody's come together, and governments, companies, financial institutions, employees, everybody's trying to come together and work and survive this crisis. A lot of companies, one of the things we are seeing is a lot of CSR work is being done. So one of the boards I'm on, the CEOs are taking the lead in terms of saying, okay, let's use our facilities to help society, as I said, making protective equipment, masks. So they're really thinking about if they can't function in their existing business, what they should do to help society. A lot of, I spoke to a hotel management CEO, and he's like, look, I know my hotel cannot function. So I'm giving my hotel out for isolation, quarantine beds, or hospitals. Hotels are giving, making hospitals. So companies are pivoting, CEOs are pivoting, and that's showing flexibility. So I think it's very important to be calm and flexible at the same time during this environment.
Thanks, Punita. We have a question on supply chains. Do we see any patterns on supply chains? What is the level of disruption? Do people know how they're going to manage their supply chains?
No, that's a very good question, and I was going to talk about it in my presentation. I thought I'd leave it to the Q&A. Is supply chains are being disrupted. While essential services are being allowed to produce, their supply chains are not working necessarily. So they are finding that they're hitting bottlenecks. So let me give you an example, like an auto company, for instance. If they have in their supply chain one component that they import, say, from China, that supply chain has gotten disrupted. So that one component isn't, the availability of even one component can hinder your product production. So there is a relook at supply chains and the need to have manufacturing closer to home for the business to operate. That's a learning I think companies are taking away. The dependence on global supply chains is is being reevaluated. And I think to some extent, the whole globalization is going to be reevaluated, because this crisis has taught us that goods and cargo cannot freely move in these kind of crises. And every country needs its own certain key core manufacturing of every bit in the supply chain, so that they're not reliant on other countries. One example I would say is that the malaria drug, hydrochloroquine, countries are realizing that, for instance, the US wants hydrochloroquine from India, and India had put a ban on exports because they felt they might need. And then now, of course, India is allowing it to be exported. But the fact remains is that after this crisis, countries are saying, well, why should we be dependent on India and China for this particular, core essential ingredients or APIs? We need to manufacture our own. And I think it is definitely going to change manufacturing.
I suppose, the same can be said about every single aspect of the business. You talked about liquidity and financing and so on and so forth. So I have a question on the impact on the financial firms. For instance, we have these loan moratoriums and things like that. Do you think that is going to have a significant long-term impact on financial services firms who are, who are standing in between, and whether they, specifically for India, whether there will be disintermediation of banks, where we've seen, credit flow go from loans to bonds and things like that. Do you have any sense of what is likely to happen as we progress through this and beyond this?
So we are not seeing a disruption in the lending on the lending side just yet, because in fact the banks are more busy than ever, particularly like in the US. Of course, there is going to be more digital lending and more digital platforms and digital financial platforms, and disintermediation models are going to be on the rise. But in terms of the activity itself, right now, because the Fed in the US has given so much stimulus and is giving so many credit facilities, that the applications for loans is at an all-time high, especially for these kind of stimulus life support loans. But of course, going long term, if business activity reduces, generally speaking, and the economic activity is impacted, then companies may require less credit because their business doesn't require as much credit. But other than the business pivoting itself in terms of doing more digital, I'm not seeing a huge loss for the banks.
So lots of questions about China, and geopolitics and things like that. You just mentioned that people want to reduce their dependence upon China and India for their supply chains. You expect that to go beyond that, or life to come back to normal once everything settles down? What is going to be the role of governments? I don't know. It's not directly related to the company focus that we have today, but it's a concern that a lot of people have.
I think one of the things, of course, we are seeing with this crisis, as I said, is people are revisiting their supply chains, their dependency on a single source of revenue or a single source of production. So China has been a big source of production for a lot of different goods for a lot of different countries. And coming out of this, boards are saying, I'm sure that these discussions will happen, is, do we want to be reliant only on China? Do we diversify into other countries? India, in fact, might even be a beneficiary of this, so that countries, there'll be much more geographical diversification in terms of companies relying on different products and services. I think India might even benefit quite significantly from this, but at the same time, I also think that many countries will try to do more manufacturing in their own country, and in India too perhaps needs to do more manufacturing instead of importing wherever it does right now.
So yeah, it's possibly this disruption is an opportunity for India. There is a specific question on whether India is going to gain advantage in manufacturing. We've been seeing news that they are bringing forward the new labor code, which was in the works, but now it's going to be accelerated, and the government is bringing an ordinance to change the way labor to bring forward the labor reforms. So it's quite possible that that may be one of the good outcomes of this whole crisis, that once we are out of the crisis, we'll have much more flexibility in the way we are able to use our labor resources for manufacturing.
No, you're right. I think some of these changes we will adapt. It's going to be a new world. It's not going to be the same world. This crisis has given companies, managements, boards, employees, everybody a learning. And so those learnings shouldn't be wasted. We're going to be coming out of this with these learnings and hopefully we'll adapt, and businesses will be performing and looking at things differently.
Yeah, and I think
governments will look at things differently.
Right, and we need to keep talking, having these conversations and trying to see where are the answers. These conversations are very important. Mm-hmm. One specific question about asset management companies. You've been in the asset management business for a long time. What specific impact do you think the crisis is going to have on asset management companies, and how to look at that problem, how to understand that problem?
Well, the asset management industry was, as it is, getting disrupted to quite a large extent by technology, right? And so I think that disruption continues. At the moment, we are not seeing any. We are seeing more, I think, impact on the sell side, on the research side, and not so much impact on the buy side, because this volatility has given. Everybody is very busy trying to protect returns for the investors. So right now, whether the markets go up or down, it creates an environment where people have a lot to do. So right now, I think all fund managers are really busy investing, trading, protecting returns, making returns. So at least in the short term, I don't see huge change, but yes, there'll be cost pressures, because as more and more, if the economies globally get impacted and we see actually a contraction in the GDP, the way some people are forecasting over the next 6 months to 1 year. And we generally see in previous crises that the economies take at least a year to recover. And the stock markets also can take up to 6 months, between 6 months to a year, if not longer, depending on the depth of the slowdown, that there will be cost pressures that will happen in every business, including asset management, as more and more people move as right now we've seen a lot of people move to money markets and cash. So fee-paying assets might reduce. If they do, then the revenues will be under pressure, and then the asset managers will also have to reevaluate their cost structures, and to that extent, there may be some layoffs that would happen. But it would be no different than any other business in that sense. But of course, the rise of technology is going to be an important factor for our industry as well.
I guess the way to look at it is that in every industry, there are some disruptive forces which are already acting, and some of these will get substantially accelerated because of the crisis. So if you are a weak player, then you will get knocked out 3 months down the line rather than 2 years down the line. And if you're a strong player, you will emerge stronger from this, whether it is digitization or any trend that you take, any disruptive trend that you take. I guess we are seeing an acceleration.
Mm-hmm.
That's the way.
Yeah, right.
Yeah. Right. Let me see what else we have.
Well, we have a lot of questions. I can see
lots of questions. Yeah, we have lots of people.
Oh, that's why I thought I'd keep my presentation a little shorter and address some of these in the Q&A.
And many of them are unanswerable. Which sector will have most bankruptcies? You answer that question for me, Punita.
It depends on the country you're in, and whether if you're a non-essential business and you are not able to pivot. And I think my sense is certain consumer discretionary businesses are going to be more impacted than the consumer FMCG, obviously, right? So whether it's travel and leisure and, restaurants and all of those consumer discretionary, I think it'll be a while before will be business as usual. And if they don't have cash and they don't have the reserves to tide this through, then they're going to obviously have to shut down. And so there are many areas like that and many sectors. So it's not only one sector, but in every sector, companies that don't have the money to tide over this crisis will and are not able to get loans are going to be in trouble. I mean, there are winners and losers. And in general, I would say that healthcare, pharmaceuticals, IT services, and sector FMCG, food, delivery, e-commerce, those are the kind of sectors that will come out as more important and to the economy and are going to be in better position than some of the other sectors who really have to pivot and rethink how they're going to conduct their business.
Yeah, even within a sector, there will be companies which are able to adjust more quickly than others because your internal weaknesses will come to fore, your weaknesses in your leadership and culture and so on and so forth.
Right.
So we will see. That's a very specific question here from one of our members about an opinion piece that came in ET, which says that debt expenses should be made non-tax deductible, and treating debt and equity equally to encourage the deleveraging. Do you want to take this question? Do you think this is practical, and industries and markets ready for such a change? So what the person is asking is it at all, should we be talking about making debt also non-deductible so that equity and debt are treated at the same level?
Oh, that's a longer term issue. That is actually something governments in each country will evaluate differently. But I don't see that as an immediate priority for any government to start thinking about that, because right now you need to have the ability to take on debt, and governments all over the world through their stimulus are giving, in fact, a lot of loans that can be converted to grants under certain conditions. So the credit actually is picking up in this kind of an environment.
So I have a question on family managed firms versus non-family managed firms, because in India we have a lot of, especially since you sit on boards of both types. Do you see a difference in the response between these two types of firms? Is there something that one can generalize?
I don't think so. It depends on the promoter, and it depends on the business they're operating in. And even by Indian governance standards, a lot of companies, even the chair and the CEO are not necessarily the same person. Mm-hmm. So there is a board. The family is generally on the chair of the board. In some cases, there are CEOs as well, but in other cases, we have different CEOs. So I think it's very company specific. I cannot generalize, but I would say that in general, small family businesses in certain sectors are facing more problems than family businesses in other sectors, and same thing for professionally managed businesses.
Do you think size makes you safer? Larger companies are safer than smaller companies?
It's a good question. I haven't thought about it that way. I think it still depends again on the nature of the business that you're operating in. And if you're in an essential business, whether you're small or big, my sense is you are in a good position. But in general, I would say your question, the answer is that there is more pain in the small and medium sector, the small business. Those sectors, whether it's in the US or India, the MSME, there's more pain than the larger companies are facing, simply because these companies just don't have the capital to some extent, and their businesses are dependent on, depending on the nature of the business, they're dependent on a workforce that may or may not be able to work from home. So I think in general, larger companies are doing better than smaller companies, and therefore I think a lot of the stimulus that we're also seeing, particularly in the US, is targeted to the small business as well.
Mm-hmm. Follow up to that is, are some governments doing a better job than others of protecting the companies through this crisis? You have a vantage point of looking at companies across the world.
I'll talk more specifically about the US, which is where I've studied the stimulus plan, and currently that's where I am right now. Is that I think the stimulus that various countries have given varies. So in some countries like the US, we've given the fiscal stimulus is 10.5% of GDP. In Europe and UK, it's even larger at about ranging between 12 to 16% of GDP. In India, the fiscal stimulus right now is only about a little less than 1% of GDP. I think there may be more coming, but then India hasn't quite faced the virus at the same level as some of the other countries are facing in terms of the shutdowns and the length of this crisis. But yes, I think governments have reacted differently in different countries. Again, the definition of essential versus non-essential, how they define lockdowns. Every country has its own norms of what is a lockdown. There are certain sectors that I said are generally across the world being treated like pharma, IT services, financial, banks, etc. They're all considered essential, supermarkets, grocery stores, food. But then the other businesses are treated differently. And the stimulus is then given based on where they see the pain. And of course, the extent of the stimulus, again, if you're a country with more money, you're able to help your companies a lot more than countries that are poor. India doesn't have quite the amount of resources, say like a US has. And so, I mean, we're seeing a larger scale of stimulus in the US, much larger than we're seeing in India.
I saw this chart that Economist had put out with the size of the stimulus on one axis and the scale of the lockdown or restrictions on the other axis. So India seemed to be far away to one side, with the very tight lockdown, but very small stimulus. So let's hope that we move in the right direction in the sense that the lockdown is eased and the stimulus is increased. So,
but one thing I would say is that companies in certain sectors are responding similarly across the world in terms of coming out to help. So the auto sector in particular across the world is all moving into ventilators. So whether it's a Volkswagen, which is Hyundai in their own countries, Mahindra and Maruti in India, and GE and Ford in America, they're all moving to making ventilators. And then all the hotels, companies, and convention centers in general are moving into, using their facilities for either quarantining or converting to hospital beds.
Indian Railways is moving to quarantine.
Yeah, correct. that I haven't seen happen in the US, but that's a good, unique, innovative way India is dealing with it. So one other thing that comes out of this crisis is innovation. We're seeing a lot of innovation coming out of this crisis as well.
So I think there is a lot to speak for India, because as a community, I think we do a lot of grassroots innovation and we respond and we solve problems. So I'm quite hopeful that we will come with ways of dealing with this and coming out of this crisis because of the way Indian communities generally respond to any kind of problem. We are hardy folks, so whatever you throw at us, we find ways of
I see the number of questions are continuously increasing.
So we have only 5 more minutes. So let's just quickly, a lot of people want to ask about what they should do as a young professional, just entered the industry, worried about losing their jobs, or if they don't have jobs, it will be harder to get jobs. So we talked about companies, we talked about the system, but let's talk about the individual for a little bit. What advice will you give to a young person who's just come into the industry?
Well, I think the hiring is going to change, right? And how you hire and the process of hiring is also going to change. So there may, you have to look at industries to the extent that those industries are always core to an economy. One should consider those industries. You have to be digitally savvy. You've got to learn digital skills. You have to learn soft skills, because I think the more business is done virtually, it's very important to have the soft skills, the presentation skills, and the ability to be able to do those things, a lot of work digitally. So I think those are all important things to consider as you move to your thinking about your career. I don't see a huge change to the way asset management industry works, other than all the natural, normal disruptive forces that were already underway. So those forces will continue to maybe some of them will accelerate and impact the financial sector a little faster than it has in the past. But I think definitely you will have to think about also always learning, because in crises like this, a lot of companies are retraining their workers, right? Because you have to, as businesses pivot, you have to be flexible as employees to be able to pivot along with them. So you have to be flexible as a young person, knowing that your career, your job could change as businesses change. So just be ready to always learn.
Thanks. I would echo that. And in fact, that's a big part of our communication to our members. And that's one of the reasons why the society decided to do these daily webinars, is that you can keep asking the right questions and you can figure out how does it impact you and take the right actions, because you're sitting at home, you're not meeting people. If you start brooding too much and not focusing on finding solutions, things can be bad. But the moment you start engaging, it becomes, instead of becoming a problem, it becomes an opportunity, because with disruption, you too have an opportunity, like the nimble firms that we are talking about. So thank you so much, Punita. We have lots and lots of questions. I've stopped looking at them.
And we have a few more minutes. I guess we could take some more.
Yeah, we'll take some more. Let me just scroll down to the bottom. And thank you for coming so early in the morning. Punita is, joining us from Boston, which is 8 a.m. there right now. So you started at 7 a.m. You had to get up early for this. How worried should we be about our personal investments in private sector banks, especially the ones who are really leveraged in the troubled sectors?
I think that's too specific, so maybe we should.
Right. Questions about the Chinese taking over the world. How much increasing NPAs do you expect post the pandemic? So there's a lot of these existential questions.
Well, I do think the NPAs, but the definition of NPAs in terms of classification, I think governments are relaxing some of the classification for NPAs. The Federal Reserve, central banks all over the world, given this environment, they're giving more, loan moratorium time periods. So the definition might change. And so in terms of the classification. But yes, I think there will be more payment crises, more receivable crises, and more debt, perhaps some amount of debt that will never be paid off.
So I have this funny question that, does everyone on the board provide valuable inputs for the larger cause, or they just get paychecks and keep quiet? How does the chairman ensure or motivate participation? So
that depends on every board. I think each independent director has a certain liability. And so it is their responsibility to discharge their duties so that they don't have liabilities. But yeah, every individual is different, and some boards encourage more participation than others. And so it's important to choose the right boards.
Yeah, and
many boards are also boards are also having to work a lot harder in this crisis.
Yeah. Absolutely. So yeah, we are at 6:30 p.m. India right now. So we have come to the end of our 1 hour, and it's been great having you, Punita. Thank you once again. And hopefully you can log into some of our other webinars. We have some interesting webinars coming up.
Yes. I mean, if there are any other important questions, I'm happy to extend it by another few minutes.
Just a second. There are questions on working from home and, the commercial property market, for instance. If everybody decides to work from home, what do we do with all the office space that we have? Stuff like that. So
my sense is that I think in India, most people live with extended family, so it's not easy to
yeah,
continue to
right.
work from home, right? So I'm sure
Yeah.
people will want to get out and go to their offices once everything is normal.
Yeah. And hopefully the automobile companies can get back to making cars, and we don't need so many ventilators as with all the
Yeah, yeah,
auto
and you probably
companies.
get
And
better
yeah,
prices too now on cars.
right. Yeah,
Who knows?
yeah. All right then. Thank you so
Thank
much.
you
Thank you
all
all the
for
participants.
a
Yeah.
very engaging discussion. Thank you all for your questions. I'm sorry there's so many questions that look like we haven't answered but for another time,
Thank you,
thank you
Punita. Hope you
again for
enjoyed it.
joining in.
Thank you, everyone. Bye bye.
Bye.